All right, guys, we're gonna give it. Gonna say 5 minutes, 10 minutes. Gonna start posting the link out to everywhere. So practice some patience, please. Yeah, it is trippy as fuck though. We're gonna shoot for 8:45 on the time. 8:45, 8:50. So we're gonna give everybody about 5 more minutes, and then I'll start. What's going on, guys? Link should be live now. Had some technical difficulties, but everything should be straight now. I'm gonna give everybody 5 minutes or so to get everything set up. Yeah, it should be live. I'm having some people who are giving me shit. All right. Looks like everything is straight. Gonna give it 1 more minute, 2 more minutes. Yeah, it should be good. Let's see. Yeah, it should be fine. Hold up on my phone. All right, well, we're gonna just go ahead and start. You know, with YouTube Live, everybody can just play back the video for whatever they missed. Today's November 8th, 2017. Don't usually do live videos. Usually either record my videos and post them later, or I'm doing lessons or whatnot. But I decided to just go live today. It's easier, helps me get my point across a little bit faster, and I don't have to do double takes and stuff like that. It's a lot more easier for me on my end. Interesting day today. Made some good calls. IDIS and TNDM. QBAK also made some money off that today. Big swing plays. But before we go into that and the recap for today and looking for some tickers tomorrow, which I'll post later on tonight, I want to go over something, that I feel like that's been really screwing over some traders recently, and it's the pump and dump. And I'm making this video just to educate y'all and to hopefully have you guys find certain patterns and strategies to know when to get out and when not to play a stock. I want to say maybe like 70%, 80% of all the trading is psychological. It really is, because you got to get to a point where it's just numbers on the screen and it's not money. And I know that sounds hard, but so it literally, I see people all the time are like, oh man, it was a trippy ass, I had like a heart attack, playing the stock, this and that. And I'm like, dude, like it's not that serious. Just calm down, have a strategy and get in and get out. And sometimes people can't do that. So I just want to go over some tickers, not specifically today, but just to give you guys some patterns, some things to look for before you buy a stock. This Sunday we'll be having a free live webinar similar to this, basically. Thinking I might do it on YouTube Live or join.me. Haven't decided yet, but it all plays into risk management. And when you take a pick into a stock, you usually want to do your DD, right? You want to do your due diligence. You want to know information about the stock. You want to at least look at the chart, look at the patterns. And if not, you're basically just going off of somebody's word, or you're basically gambling. And I mean, if that's how you roll, then do that. I mean, I'm not going to tell you what to do, what not to do, but I'm just going to help you try to figure out, hey, this may not be the best route to take. So we're on TradingView. I'm going to expand my screen a little bit more so you guys can see what I'm seeing. I'm looking at ticker MARA, Marathon Patent Group. And you can see right from the start that we can see where the pump and dump is, right? It on November 2nd had some news, all of a sudden popped up to $2.32. That was a high, and we're looking at the 30-minute time frame, right? So each one of these candlesticks represents a 30-minute time frame. So you have 30 minutes here, 30 minutes here, 30 minutes here, 30 minutes here, right? So all in all, these 4 red candlesticks are 2 hours. So we had the open on, or we had the close on the 1st. It was gapping up from post split on the 30th. So that was a couple of days after the split. And you can see the pump, and then the dump, right? So you're saying to yourself, oh man, let's say here, let me go to my draw, a little draw candle. And my computer's been really slow today. I don't know why. Probably because I have a bunch of apps running, but I'm sorry if there's a little bit of a lag. So we're going to go back to the screen. So one thing to look at, and when you're looking at a stock, is to, even if you're not a technical trader and you don't really care about what all of these things mean, at least know what one of them means. And especially the relative strength index. So that's like basically a momentum technical indicator. And I really really recommend going on Investopedia and looking up each and every screener and specific technical indicator that are most commonly used. So your MACD, your accumulation distribution line, your vortex indicator. Vortex kind of came out later on, like around 2010, but at least what I use Bollinger Bands as well, estimating moving averages. You can then play around. You can even make your own oscillators. I know a lot of people make their own type of indicators that take into account different, technical values and stuff like that. Remind me tomorrow. So we see this big volume jump, and usually what pump and dumps are, you're gonna make sure you look for volume first. So you're looking for low floaters. You're looking for stocks that are trading like 10,000 or 20,000. These are the kind of stocks that pumpers like to pump. These are people basically making money off of your stupidity, right? So if I'm a pumper and I want a stock, so let's say we usually see a lot of stocks get pumped up after splits, right? So they'll increase the volume, and even though over time this has been a consolidation, so it's had that stoic action before the split. Then after the split, you'll see the increase. People will usually buy up here, and they'll get shafted down here. They'll probably sell. And like I said, you got to make sure you read the news. So you got to look at news and volume. That's the only way, or those are the biggest ways people like to pump. They'll just have an influx of volume right here. You'll see the RSI extremely oversold, right? It's breaking the band at 70. You don't want your stock to go over that 70 line, right? So it's already over that 70 line. It's at 77. It's oversold. It's also, it was a penny stock. I remember Mara being like, fucking 50 cents. So like not even too long ago. So for you as a trader, you want to think rationally. Hey, it's a post split. There was already a spike. It already dumped, right? And this is all within a couple of days, right? So from the 30th to the 2nd, right? So look for splits. So that people are going to try to, pump it up after a split. And I'll show you a couple other tickers that have had, I can show you hundreds of tickers that have had, revenue splits and spiked and then crashed. So if I'm a trader and I want to get in on this, maybe a good play would be to buy into a stock after the split, get your money, then get out, and then wait for another pump, right? You never want to stay into a pump for more than a day, because that's just, you just never want to hold the stuff overnight, because as an investor, you want to make the most money, right? So you want to buy at the lowest point. So, and let's say you sell, yada yada, then the next couple of days you see this spike, right? So as a trader, you got to think, hey, this candlestick is way out of there. It's outside the Bollinger Bands. So the Bollinger Bands, like I said, I'm not going to go over every technical indicator, but here's I'm just trying to tell you guys how important technical indicators are and how easy it can be to use these indicators to spot pump and dumps. That's what we're really trying to get into. Maybe I'm not teaching it, or maybe I can't. If I could, this live video could be 10 hours and I can give you a rundown of every single thing, but I can't do that because I don't want to, obviously. But what I'm saying is, just don't buy into a stock blindly. And again, I'll show you examples. You have the split, spike increase. I would buy before this, or buy right after the split. If I was, I don't really usually play, low float stocks like this, but like I said, there's no volume right here. That's just sketchy. And you can tell if a stock doesn't have volume from before and the news isn't something that can magnitude a 20, 30, 40 cent gain, you know it's a pump. Now the question is, when do you get out? One, you get out when there's an extreme. So extreme, you're outside the Bollinger Bands. Extreme, oversold RSI right here, right? Your MACD is at the top of the mountain, blue line. And you have your vortex indicator, you have your accumulation drop, which you can see right there. So for you as an investor, as a retail investor, you want to get out in that 30-minute candlestick. Let's say you got in right here. Don't be greedy. Just get out right here. And like I said, on a 30-minute time frame, this bar moves up and down. As you can see, this is the candle and this is the stick, right? Your wicks are your endpoints. Those are the highest and lowest points of the 30-minute or whatever time frame it's in, right? So you want to get out when there's an extreme. And you see this huge red candle indicating extreme sell-off. And like you see, no volume for the rest of the day. And you can see it going down. So, Jimmy, who decided to pump this up, may have gotten in right here and said, hey, you know what? I'm going to make an alert. Or, sometimes there's guys on StockTwits with like, hundreds and thousands of followers, and, they'll say something and, believe it or not, they might have some sort of influence. So the important thing I'm trying to say is study your technical indicators. Know when a suspicious, volume outbreak is going on, especially with a low floater. If you see a stock that's trading, at 10,000 shares, 20,000 shares, and you see a, volume increase of, 10,000, 30,000, 40,000, that doesn't constitute a buy. And I know it's hard sometimes to see a stock go up, but, there's a lot more safer plays out there, and I'll show you that later. So talked about the splits, right? Let's go to another one. What split recently that everybody was all over? SPI, right? SPI was a big play today, right? They just recently had a split. So remember Mara? MARA had the split and it had the spike, right? Same thing here with SPI. You see the RSI has been chilling right before the split. Now, if you got in before the split, you might have been screwed, but you may have been listening to news. Whatever, they had to meet delisting requirements or whatever. So you're saying, oh yeah, they have to get over $1, right? Well, that's why they're doing the split. They're doing the split to raise their price up. But the thing is, they have to maintain that $1 for like 10 days or something like that. I always forget the SEC, or not the SEC, but the NASDAQ requirements. But anywho, so yeah, you're gonna see a spike, right? So for me, if I know the split is coming, I'm gonna say, well, fuck it, I'm gonna go ahead and buy, right? I'm gonna buy, even though it is a risky play, and like I said, all pump and dumps are risky. The stock market is risky. But if you have a set plan and you have a set exit strategy, you increase your chances of making money. Now, this is when you're supposed to take emotions out of it, right? I've seen people all day today say, oh, SPI is going to go to $3. SPI is going to go to $290, $280. It's going to fly to the moon, yada, yada. No. Be realistic, right? So now it broke out of the band, right? But this is highly skewed because of the split, right? So the band has to adjust. So essentially, this first candlestick doesn't really mean anything. It's just it's literally the first candlestick right after the split. So I'm thinking, hey, I have to pay attention to the next 2 to 4 candlesticks. So when I look at these next 2 candlesticks, right, or the next 4 candlesticks, let's say I bought, hypothetically, I didn't buy SPI. I was in other stocks, but hypothetically, I would have bought SPI at 135, right? I would have bought at 135 and I would have sold depending on, like I said, I didn't have a point of resistance or support because I really didn't know what was going to happen. This is the part where it's risky, right? Because there's no data anywhere here because the stock was floating at literally 12 cents, I believe, before. I'm not going to scroll back in, but if I can remember, it was at 12 cents or 10 cents or some shit like that. So also, excuse me if you guys hear me, have profanity or whatever. I guess ignore it or accept it. I'm just like I'm a normal person. I'm an average dude. I'm not, going to be super professional. I'm just going to tell you how it is, what I see, stuff like that. If I do a lesson, one-on-one lessons, I'm a lot more professional, but, this is just me, shooting the shit, letting you guys know my thoughts. So for me, I'm not going to sugarcoat anything or try to make anything sound nice or, whatever. Sorry, just going off topic here. But all right, back to the point. So we're looking at all these candlesticks, right? So you're saying, all right, I'm going to buy SPI 135. You can see that huge spike that it went up. I think it went up to like 260, 250 something. I would have a mental stop loss or stop or sell limit at $2, right? And like I do, I scale my positions, right? So I scale my positions to prevent, a massive loss or basically to help secure my gains. And also in the case of, let's say SPI, I can make the most of my money, right? Let's say I would sell 50% of my position at $2. Then, if I see a positive, buying pressure, I would probably sell another 50% at $2.20 or 25% at $2.20, and then let the rest of the 25%, that's basically house money. So like this is an exception. It blew up within that 30 minutes. I probably would have tried to sell at the highest point, and I probably would have been out of SPI, in these first two candlesticks. So think about it. This is 9:30, right? This is 9:30, and this is 10 o'clock. So from 9:30 to, this is from 9:30 to 10, and then from 10 to 10:30. So basically, you're looking at 2 candlesticks worth of time. So for me, it's an easier way to get out, and it's less stress to stay into the stock later on, because as you can see, the stock dumped at the end of the day. And like I said, this stock only has to be $1, so don't be surprised if SPI crashes. The pump was there, and it was successful because now you have bag holders. Obviously, people who think the stock is going to go to $3, right? So here's also something that you can look at. You can look at the technical indicators. What is this telling you? This tells me that it's flowing back down into the RSI. You're probably going to have negative selling pressure. Can't really tell by the vortex. The MACD makes me uneasy. Distribution makes me uneasy. There's nobody accumulating shares. So what is there tomorrow? Probably you're going to see SPI decrease in price even more. Could they pump it again? They probably could. I mean, they pumped it at 260. There's a chance. Now look. Have another pump, but make sure you look at the RSI, etc., all the tickers. Make sure to look at the candlestick exiting the Bollinger Bands abnormally on the 30-minute time frame. So make sure you're looking at the 30-minute. Don't look at the daily. Don't look at the 5-minute. Don't look at the 1-minute. The 30-minute basically helps you really get a gist of what's going on. Let's do another one. And like I said, people are like, oh yeah, just buy. But how are you gonna buy something without doing your due diligence, without reading any news, without looking at any charts? You at least have to read the news, or you at least have to read the basics. And the basics are so easy to find. You can find the details. Like on TradingView, you can find the details. You can get the financial reports. You can find out if you're even if there's even a hope to keep this over time. Looking at the income statement, the balance sheet, you know what I'm saying? Like the actual fundamentals of the stock. And you can see real-time data. You can look at the average volume, its market cap, whatever. I have Thinkorswim. Thinkorswim is a little bit more accurate with the volume. But when I'm on the go and I'm making trades, I'm using, TD Ameritrade. But this is what I used to study and whatnot. So if you guys are confused or more familiar with Thinkorswim, just let me know, and I can use Thinkorswim from there on. But I just really like TradingView because it has a little bit of a better user interface, a little bit more easier to look at on the eyes. So yeah, that's why I use it. So we're going to go to any. That's another ticker that split recently, if I can remember correctly. And I believe it spiked, but we're going to have to go back a little bit on the chart. I could have sworn it had a split some time ago. But like I said, you can see right here, that's a pump. It's a good old pump. Look at that spike increase in volume with consolidation from all the way out here. No volume, shitty volume. All of a sudden, someone decides to pump it with that big candlestick. RSI, out the woodworks. Definitely going to go back down, right? And if you weren't, already holding on to it before, you're probably out of luck, right? Unless you're just sitting on a penny stock, or one of these stocks that have pump and dumps regularly, or unless you're really like up to date on the Momo scanner, which is your momentum scanner, or any scanner that you have, you're probably gonna get a notification like at 3:41, right? And then by the time your order fills, it's like at 3:55. You're already at the top of the candlestick, and and you maybe got the alert right here, right? And originally, the guy who probably gave you the alert probably bought the stock right here or here before everybody did. He's already has a cushion, right? He'll probably sell. He'll probably sell right here, and then he'll say he sold right there. And then all of a sudden, you'll see that, that huge decrease in or increase in selling pressure, right? Let's see. I could have sworn there was an earnings or revenue split on any. I can find it. Also, if a stock, it's really common if a stock has gets a pump on no news or old news. I know a lot of the times, like Interdiagnostic Group, IDXG, they changed their name, and that was news from like 20 days ago, and then all of a sudden they just re-released that news on a different article, and the stock went up like 30-40 cents off old news. So make sure you're always doing your due diligence. Never take what people say on stock twits to heart, because I know, when I started, I did it. I didn't know what I was doing. But yeah, I'm going to be honest. Like sometimes I would just blindly, pick calls off of people, and because I didn't know crap about the stock. Oh, there's a split. I found you. But sometimes I didn't know anything, so I would just buy what people were saying, and I was losing money, and I was like, there's something doesn't add up. So that's when I took a little hiatus and started, studying and figuring out the charts more specifically. So when we talked about splits, right? So we see this split right here on 7/12. Oh wow, my memory is pretty good. Okay, so this was way back, right? This was in July. So it had a 1-25 split. So I'm thinking, well, I mean, right now, what we've seen so far, right? 2 for 2 on split increases. So don't buy, and sometimes splits go unannounced, and you get sometimes it shit hits the fan. I know the shippers do it, TOPS, DCIX, DRYS. Sometimes they'll announce a RS without any telling anybody, and or you'll see an offering or something. Sometimes you can't predict what's going to happen, but most of the time you'll see, all right, split effective on this date. And sometimes you'll see split effective immediately. And that's when you'll sell and then maybe re-enter when the split pricing readjusts. But like I said, the split happened on 7/12. I'm looking to get in. Maybe I'm not going to put a lot of shares in. I'll probably put like a minimal amount of shares. Let's say realistically, if like I was looking at it right now, if this was real life, maybe buy like 1,500 shares or 1,000 shares at $2.95, $3 maybe, just to see what's going on, right? Just to see if there's going to be an increase or a spike. You see consolidation, so we don't really know what's going on, but more than likely there's going to be a little artificial pump that's going on. There's a reason why they split. They'll probably release some news. Boom, you see the increase. So it went from the split price at I guess they opened at the split price at somewhere around like 360 something. But let's say you bought, and like I said, you got to look at the candlesticks, but you see the decrease right there. You see the next decrease. You see the next decrease. So now you have to readjust. Look back at your RSI. It didn't spike up. It's oversold, kind of. Hasn't really broke out of the bands. There's low risk. There's low risk involved, right? There's no volume. You're not going to lose that much money if you set your stop loss at a certain point. So there's not a lot of risk. We don't know what the reward's going to be. We're looking for like maybe I don't know. If you buy it here, you're looking for like a reward at 350. But you see the spike to $6.50, 2 days later. So, and then obviously the dump. But like I said, if you were smart enough to know the rules, or not the rules, but the patterns that go on with splits, maybe you could have gotten in before, instead of finding out about the jump right there, and off an alert, and being the dumbass that sometimes we are, ended up buying here or there. I knew somebody bought any, or not any, but a stock similar to any, at the top of the candlestick, and then they lost like, I think it was like $2,000, and they weren't trading that much, so they weren't trading on initial capital that much. So, yeah, man. I mean, yeah, man. Yeah, girls and guys. Just know your technical indicators. Know your patterns. Don't buy something that you don't know anything about. And if you're a technical trader, like congrats. Look at the chart. Look at what you've known from charts. You see the break on the Bollinger Band. You see the RSI peak. You see the volume. Absurd volume compared to the average down here. You see it way too high. That means you need to get out. That means you need to readjust your pricing. That means you need to take your profits. Take your profits, guys. Over time, secure the bag, rack up your cash, and increase your income, increase your capital. Then you can start making some serious trades and getting reward, as opposed to just putting all your stuff, putting all your stocks into one penny stock, or one stock that's rising off of one candlestick, and you get an alert, and let's say you throw your whole portfolio. And I've literally seen people who've thrown their whole portfolio into one stock while it's at its peak, and I'm sitting there like, oh my goodness, you're gonna lose all your money. And they're like, well, this guy on StockTwits told me this and that, or this guy on Twitter, this guy on Reddit. I was like, bro, these people have their own, these are opinions, This is, at the end of the day, it's your money. It's not somebody else's money. It's not You know, it's nobody else's money. It's your money. And like I said, I know I said, you know, look at it as just numbers on a screen, but at the end of the day, who's pressing the button? You are, right? You're the one who's on Robinhood pressing buy, or Fidelity or TD or whatever you're using, and you're saying, okay, I'm gonna buy this, and I'm gonna be okay with losing this much money, and I'm gonna be okay with making this much money. So, and I'll write everything down, or not. I won't write everything down, but I'll write down the indicators I use, and you guys can go ahead and study or look it up on Investopedia, and you know, look to see you know, how to master these indicators. Because really, if you have these indicators with you and you see it on your Momo scanner, you know what? Like for me, I could look at the stock now, and I would know when to buy and when not to buy, right? If somebody said, "Hey Mo, look at this ticker right now, just split," you know, I think it's a buy right now, and he's telling me this at 5:30, 5:34, you know, and I'm like, I don't know, dude. I don't think I would buy this. I would know within 5 to 10 seconds. I would know not to buy. And okay, let's say I was wrong, you know, and it goes up to 650, 645, which it did, right? So I mean, if I bought then, I could have made my money, right? But think about it. This is in a 30-minute time frame. Think about all those people buying and selling. And I don't care how good your broker is, your ability to have your order fill in at the price you want. And I know you, okay, set a stop, set a sell limit, you know, you'll be fine. Dude, I've heard horror stories about order limits not being filled. I'm not going to do that. Why would I do that when I could have just bought, you know, down here or wherever I could have bought? I'm not going to buy at the top. I'm going to buy it at the bottom. You know, that's basic economics, right? So just a quick rundown of what we went over. So look at extremes. So when you're looking at your phone, when you're looking at a chart, when you hear something about a penny stock, you see a lot of pump and dumps in nano stocks and nano and micro stocks. So those are stocks that are less than 300 million in market cap. So you're going to see that. And I mean, you can see pump and dumps in bigger stocks, and some blue chip stocks, but a lot of people don't know what to make of it, because, you know, they say it's like such a good stock. There's no way it could be manipulated like this. But there are plenty of stocks that are manipulated every day, from the biggest to the smallest. And sometimes we lose on pump and dumps. It happens to the best of us. Sometimes, I mean, I've lost on a couple pump and dumps. Like, we're all human. But the name of the game is to stop yourself from losing, right? And stop yourself from losing, and also, if you are losing, to minimize your loss, right? And right now, especially in this market, you have to work smarter, not harder, right? Seems like everybody's making money because we're in such a crazy bull market, right? So, end of the day, look for clues, look for revenue splits, look for companies that are going on a delisting notice, right? So companies that have to meet a certain requirement, they went OTC. Bonton, BONT, didn't meet requirements, went OTC. You know, there's so many stocks that, you know, didn't make it. But what most likely happens, you usually see a pump right after a split. That's what I've seen. That's what I've banked on most of occasions when it comes to splits. Even if I play splits, don't buy long term on splits, unless it's a blue chip. I know sometimes there's been a couple big stocks that have split, and that ended up being good in the long run. But the reason of a split is basically to dilute shares, because, you know, a company is not doing what they're supposed to do, right? And you see that, you know, being known as toxic dilution, And I hate to mention shippers again because they've had such a great week, or a great beginning of their week. But they're doing it. They did it all year, and now you're seeing lawsuits and all that stuff, right? So look for splits, look for spikes after the splits. Look to get out when you see an extreme. Look to get out when you see it break the Bollinger Bands. Look to see when you see it on the RSI daily or RSI 30, when you see it break that band point at the 70. Look to see if accumulation is way too high. And you're going to see, and you wait to see the dramatic sell-off from people who made their gains, right? Look to see if the vortex indicator, the vortex positive and vortex negative are converging or diverging. So look up those indicators. I'll post the indicators in the description. Those are the basics as far as finding out a pump and dump. Also volume, forgot to mention that. Look at the volume. Look to see if the stock was 10,000 or look at the average shares the stock was trading. So any was trading on 202,000 shares of volume today. Average volume 468. So you're gonna see it's trading pretty low, right? It's a low float right now for its consideration, for its standard, right? But look for pumpers really love pumping stocks that they can make a difference in. So let's say I have a reach of 10,000 people, 20,000 people. If a stock's only trading on 10,000 shares, 20,000 shares, your influence could spike the price up, right? So they're probably going to be pumping low floats, low volume stocks with no volume happening before their alerts. So if you see an alert, if you see something from Zacks Investments or some crazy email subscription or whatever you're seeing, look at the volume before the alert. Look at how much volume that stock is going up at. So what do you want to see, Mo? Somebody asks me, what do you want to see? What kind of stocks do you want to see? How can you tell if it's really a pump, or how can you tell, like, let's say sometimes stocks are actually doing what they're supposed to do and going up, right? So let's look at TNDM, right? So TNDM, I called this on November 6th. So that was Monday, right? Called it as a swing. I bought a handful of shares at 229. Hit an intraday high at 265, I think. One thing I like to do, we're going to switch to the daily chart. I like looking at the daily chart when I'm looking at my swing calls. I'm a swing trader. So that means I usually hold a stock for I don't day trade. So basically, if you're not a day trader, you're either a momentum, intraday, or swing trader. So for me, I hold stock like a couple days. I'll buy example for TNDM. I'll buy at 229. And I'll cash out at 265, right? Or if you see a certain pattern, like for instance, and we're way back here. We're in 2015. Jesus. All right, let's go back to this year, right? Right. So we charted this on the Hustle Trading website. So you're saying to yourself, man, how do I find a stock, before it goes up, right? So I posted on the YouTube page the video about how to find the best stocks. So basically, looking at your screener, right? So, it's 9:30 right now. I'll probably look for a couple stocks on TradingView with my screener. I'll probably look for some oversold stocks that are trading at the bottom of the RSI, and maybe I'm looking for a reversal, right? I'm looking for some gap space to fill, looking for something that has low risk, high reward, something I know my stop loss will fill at. So we're looking at TNDM, right? So when I talk about knowing your stock and knowing your due diligence, I know I'm a technical trader, and I don't really have a big background in business and economics. I didn't go to business school. I was a science major, right? I dealt with plants and uh, biology and stuff like that. So, like for me, fundamental analysis is a little bit harder for me to come by because I had to teach myself that stuff, and I also had to teach myself technical analysis. But the lingo and stuff like that, it's hard to learn, right? So when I say you do your DD, for me, I found my certain criteria for DD, and I'll make another video about certain criteria for due diligence, especially if you're a technical trader and you don't really have the time to look into all of the stuff that a lot of people take pride in doing. I'll be the first to admit, I won't be the first to admit, I know a lot of people do admit this as well, but sometimes I don't know anything about stock. Sometimes I'll just trade a stock base just off the charts, right? And I found that this is my style of trading, and it works for me. I make money, so I'm gonna keep doing that until something changes. And sometimes I have lost on trades based off charts because I wasn't looking into the fundamentals. So for TNDM, I'm looking at some fundamentals and I'm looking at a lot of the charts. But so TNDM basically has a lot of insider buying at $3.50. So I know the stock can go to $3.50 because if insiders are telling them or telling each other or buying a stock at a higher price than it's at, they know something that we don't, right? More than likely. But like I said in my chart analysis a couple of days ago, you can see bottom of the RSI is stoic. It's not breaking that RSI support line. As a trader, you have to know when a stock is risky and when a stock's not risky. And we looked at that with the pump and dumps, right? And you're saying to yourself, man, how can I make money then off of the same concepts that you're teaching me with the pump and dump? Just look at the RSI. Just know that if the stock goes the stock can't really go that much lower. If you think about it, look at the past history of the stock. And this is why I say do your due diligence. The stock is already trading at a 6-month low, right? And I know it's split and whatnot, but just think about it. It's trading at the 6-month low. There's a lot of gap space to fill. I read up on you read up a couple of articles, you end up finding the insider buying. Now you're a little bit more confident on your buy. This is a good swing opportunity. This might be a good long opportunity. And to be patient is the #1 thing. So a couple of days ago on Monday, I saw that the VORTEX indicator was diverging, the VI positive. So I'm thinking, hey, there might be some positive buying action coming up pretty soon. And a lot of insiders they'll have 1 million shares and they'll split it up into block buys and they'll buy over time, right? To maximize their most money, so people don't realize, because we have level 2s, we can see things behind the scenes. Technology is pretty cool now, but you see the RSI, you want to fill that space, and essentially that's what this rectangle is. This is all this gap space that can be filled by that little momentum line, right? And we had great volume today. The bulls won, and you saw the spike closing into the estimated moving average. So there's a chance that we might see a reversal going to next week. So I'm looking at possibly making some money on the 13th or the 14th of November, right? Or the 14th. So wait, Saturday's 11th, 12th. Yeah, so looking to make money on the 13th, Monday, or the 14th, Tuesday. And that can be confirmed in many other things. We can go into other videos. Maybe you can schedule a lesson. But for me, looking at the RSI is one of the biggest points to look at. So that's one we found. That was a win today. So shout out to you guys who pulled off that call and joined me on that one. Like I said, you can find all my stuff on my website. That'll be posted in the description. We'll post one more chart, or maybe two more. So ITIS. Another play where I was looking at the RSI. I got out of ITIS today at $3.05 from a $2.35 entry point. This was all charted on Monday as well. So what I was looking at essentially was the same thing. The vortex was pulling up, the VI positive. Accumulation was in the middle. You know, kind of indifferent on the accumulation. I wasn't really, paying attention to that. I know that ITIS is a high runner. It can get hot sometimes. I remember in September it went up to $5, as you can see right there. But that green line, basically, you can draw resistance and support on the RSI, which is pretty cool. So you can track momentum and see, if it breaks that green line, you're going to see an increase in price dramatically, right? So for me, I saw that it didn't even come close to bouncing off the green line, right? So it pivoted here. So that's when I sold. And, that's something you'll get better with time. But like I said, the RSI is such a beautiful technical indicator. And, if used correctly, you can really, really have a good prediction on stocks on the daily if you want to be a good swing trader. When you look at it on the day trader perspective, it really just depends on what time frame you're looking at it on. So, like I said, each candlestick represents a certain time frame of when buying and selling action is going on. So it's obviously going to look different on a different time frame, correct? Because you're getting different metrics. So if I'm looking at the 30, the resistance point is going to look a lot different, right? And sure, you can probably see that it's going to go down when it's on the RSI 30 or RSI 70 because it's different. It's on a different time frame, like I said, as compared to the daily. But like I said, this isn't a pump and dump. And why? Because as opposed to not having that much volume on the 1st of November in this area, so you see there's no volume here, and you see that first green candlestick where the price starts to increase, you see a confirmation in the growth of the stock, right? You're not going to see a dump anytime soon because the volume is increasing, right? The volume is staying consistent with the price action. So that's when you know, hey, okay, maybe a drop isn't coming soon. You keep playing it, you keep playing it, you keep playing it, keep playing it. At this point, you're already up so much. This is when the growth started at $1.94. You're already at $2.97. You're a dumbass if you don't sell if you haven't sold at this point, right? So I don't really feel bad for anybody who lost money here, because ultimately you could have secured gains, and that's when we talk about risk management. And like I said, I saw this before it was going to happen. Called it on my stock twits. You can look back and verify, but I knew this was going to happen. You just can't fall in love with stock. You got to secure the bag. All right. Let's do one more. We'll do one that I bought today. I bought Pandora Media today at $4.89. So I'm down a little bit, not that much. So earnings came out for Pandora Media Incorporation. Pretty shitty earnings. Dropped their stock from $8 to $4.85. 85 cents being the most recent today. But they beat their earnings by 1 cent, but the actual information in their earnings had a negative sentiment. So Not looking too hot for Pandora Media right now. Am I looking to hold Pandora Media forever? No, I am not. But I'm looking for the bounce. I'm looking for the bounce off the bottom. You know, I could have bought right after the ER, but, you know, I wanted to see the market reaction. Like I said, this was an excessive dip. It's outside of the Bollinger Bands. I'm going to wait for the first 2 to 4 candlesticks. I see continuous decreasing of the candlesticks after the first, after the first candlestick after the response of a big event. So this is how it goes. Big event, earnings report, split. Look at the next day candlestick, right? Look at the first candlestick. Is it green or red? Huge buying because it went down. People are trying to get in on this dip, right? And then you look at the next couple candlesticks, and at that point, I'm gonna be like, all right, I'm gonna wait on this for a little bit. You know, wait on it a couple days. Look at the accumulation line. Looks like it's about to have a hard little reset here on the daily. We may have found a bottom. My stop loss is at 440 something. That's what I'm willing to lose, right? But like I said, there's a bunch of gap space now. I know I don't think it's going to reach $7 anytime soon, but I do know that there's gap space to $5.37. So that's a small win. That's a highest statistically wise. I'm looking to make, money here, and it's a low risk play. Like I said, it's way oversold. There's room to run, right? The MACD is pushing its way across, and the distribution line is going past the equilibrium. So for me, like I said, I trade reversals, but I look at the stock and I look at the history of the stock, and that's what I'm really trying to practice in this video, is really just to look into a stock before you buy it. And I'm like, I don't know how many times I have to say this, but make sure you look at news. Make sure you look at volume. Make sure you study technical indicators, and make sure you put an association with technical indicators. Sometimes one indicator may be a fake out indicator. Sometimes, a stock is a lot more than just looking at the RSI. You have to look at a bunch of factors. So with that, I'm gonna go ahead and look at some tickers. Gonna end this video. Look at some tickers, post it on the page, along with some charts. See what I can find, and I'll post some links in the description. I'll also post the indicators that I mentioned today, along with a brief little blurb on StockTwits, just to recap, just like the basic rules that I look for, because I don't really have a PDF or anything that I want to give out. But yeah, if you guys are interested in a lesson too, there's all information on my website. And that's that, guys. Hope you guys learned something. If you guys want to learn something else, if you guys have any questions, my email is going to be in the description as well. You can comment, like, subscribe, and tell your friends about it and whatnot. And hopefully we'll make some more videos, guys. But like I said, hope you guys learned something. Have a good night.